right, welcome back, fail-safe investors, future wealthy people of America, or wherever you're watching this video from, future millionaires, billionaires, whatever you consider to be wealthy. I got a special video for you guys today. I'm doing a stock analysis of Tesla. So if you was wondering about Tesla, are they overvalued, fairly priced, or undervalued, we're gonna look into them today. I'm gonna give you my opinion, and we're gonna see how much is Tesla truly worth. So let's go. Let's go. So Tesla, yeah, Elon Musk, I'm just gonna start with Elon Musk, is pretty much like the Steve Jobs, or the second coming of Steve Jobs. And I say that because the same way Steve Jobs brought us the first touchscreen phone with the iPhone, is kind of what Elon Musk is doing with Tesla. So he's supposed to deliver on the promise of fully autonomous driving vehicles. Pretty much you don't need no one in the car for the vehicle to drive. And they're almost there. They're doing more testing, and they've logged that the more they do tests, or the more their cars that are being used by people or the owners, the more that the autonomous or self-driving part is being used, the more it's learning from that, and then they could pretty much send software updates and all that. But let's just get right into it. So this time I'm going to give you like the basic overview of Tesla, because like I've already mentioned, I've mentioned Tesla in another video. This will be a growth stock. So Tesla, ticker symbol TSLA, selling for around like 882 bucks, almost pushing that $900 a share price point right now. It doesn't have an earnings per share. So since it doesn't have an earnings per share, it's not going to have a price to earnings. Like I mentioned, it's a growth stock, so it's not going to be paying a dividend right now because they're trying to grow this company as much as they can. And Tesla operates in two segments. According to them, they operate with the vehicle, a fully electric vehicle. But they don't just sell the vehicles, they manufacture the vehicles. They pretty much run their whole business from top to bottom, all in-house. And everything they say is electrical, in the manufacturing part, all of that. They're building a new gigafactory in Berlin. They have a gigafactory in Shanghai, China. They have a gigafactory in New York. They have a gigafactory in California. They pretty much are building factories everywhere to pretty much to keep up with the demand of their sales. Pretty much like a lot of people are ordering Teslas, and they're building these gigafactories to keep up with the demand. And another benefit about Tesla though is the government, and not just the United States governments, a lot of governments around the world give people tax incentives for investing, or should I say buying a Tesla. So I know in America you get like a $7,000 tax credit when you purchase a Tesla that you can write off on your taxes. In other countries give even more, some places. So Tesla is huge, they are growing. Now the revenue isn't the typical revenue that you would see with an auto company, but after my research into Tesla, I wouldn't call them an auto company. I would definitely put them under more of a technology company, because they're more like software based, and they're trying to change the world. So like their whole business model, even how they word it and phrase it, like they're truly trying to change the world. They want everyone to pretty much get off of like burning gas and fuel and leaving carbon footprints, and pretty much get fully into like electric with the cars. They're making the cars more affordable. They want everyone to have an electric car, fully electric. And not only that, they're pretty much the greatest or the best at what they're doing. Like if you Google the range, what Tesla can get on their electric cars versus any other electric car out there on the market, and I mean any car, even the Porsche, Tesla pretty much is blowing them out the water. And that's on the base model. Like even their base models are getting more range than a lot of these other electric car companies. Not only that, the autonomous driving technology, and then the other segment, how they operate, is like their solar panels and generators that they have also. So I say that to say that this company is pretty much changing a huge trend. So they have they're pretty much in the next generation of things. They're helping usher in that next generation of everyone going electric, from like not just driving your vehicles electric to have like an electric house. They have solar panels on your house, and that's pretty much how they operate. They do not own SpaceX. Elon Musk is on the board at SpaceX, but they do not own SpaceX. They pretty much have a solar business and the electric vehicle business, and they do sell used electric vehicles. But like, I did a little research. Even when you look up the used Teslas, like a Tesla Model S used, you're still not gonna find one for under 30,000, and that's even one that was like a 2014. You're not gonna find one for under 30,000. But Elon did make a promise that he wants to make more affordable electric cars. He did that with the Model 3. So right now, currently, Tesla has the Model S, the Model 3, the Model X, and then they just currently started releasing the Model Y in 2020. They have the Cybertruck coming, and then they have the Tesla Roadster coming, which would be like their more sporty looking car. But the Tesla Model 3 and the Model Y are both like the affordable versions, and then their Model S and their Model X is more like the luxury side of things. So pretty much they're basing their business model off of original like manufacturers things. So like how Ford has like Lincoln is the luxury side, and then the Ford is like their actual like broad side of the business. That's pretty much what Tesla's doing. So they have all type of make and models, something for everyone in the lineup. Now, when you do look up car manufacturers, the #1 manufacturer is General Motors in America, but General Motors doesn't have the most sales. The Ford F-Series is like the most wanted, coveted, and sold car in the United States. Not a shocker. But Tesla just released the Cybertruck, which is supposed to be a competition to the Ford F-Series. So he's pretty much coming for every niche market there is. If you like trucks, he got something for you. If you like SUVs, he got the Model Y, the Model X. If you like sporty sedans, he has the Model S, the Model 3. If you like coupes and things like that, that's where the Roadster will come in, and the Roadster does like 0 to 60 in 0.1 seconds or something like that. It's supposed to be like the fastest street car out there when it will be made. But he's coming for every market. And then they have the semi trucks that are fully electric too, and they have the most range on the battery. So I would definitely say that this, even selling for $882 for today, I would say like it might be overvalued to a lot of analysts. A lot of analysts might look at it and say, well, they only make $26 billion in revenue. This company has a market cap of $160 billion. No way, this is definitely overvalued. But I would definitely say the profits or the future profits that could come from them finally developing that autonomous vehicle or the autonomous driving feature could be crazy. It would be definitely like buying Ford in a time like when Ford is becoming Ford and like people are still like on carriages and all that, and then like the first automobile is introduced. I would definitely say it's like that. So even buying it at $800 right now today, I hate to say that's kind of a steal. I can definitely see even within the next 2 years, I can see Tesla stock passing $1,000 a share. Now, some people have said they can see this stock being $7,000, you know, down the line, 10 years and all that. But I'm just gonna say, like, even in the midterm, the growth side, I could definitely see this company being over $1,000 a share, maybe even over $2,000 a share. So I would say that buying it at 800 is a deal. Now, within these stock, there is a risk, and you have to account for market volatility. So that's why I always say you have to do your research and kind of understand the fair value of the company. Like I said, $800 right now, Tesla is kind of a steal. But, you know, we can't finish this video like that. We gotta go into the financial statements. So Tesla made $24 billion in revenue in 2019. They have $6 billion in cash on the balance sheet and $12 billion in current assets on the balance sheet versus $10 billion in current liabilities. So it's not bad for a growth company, but when you're valued at $160 billion market cap, a lot of people would definitely say this is overvalued. But I definitely see more in the future for Tesla, especially with the intellectual side of the company. But let's not go too far off into that. So the total assets is $34 billion versus like $26 billion on the total liabilities. So like I said, it's not a bad balance sheet. I have seen better. I would like to see better, but even with this balance sheet, even if, I'm gonna be honest with you, even if Tesla had more debt than assets, which I doubt, like it's happened, but even if they have more debt than assets, I still would say this is a good buy just because of the autonomous driving side of things and all the other things that pretty much come with Tesla that they are making promises on and they're showing progress on in their technology side. So I would definitely say $800 for this is not bad. It's definitely a growth company. Then when we look at the income statement, they made $24 billion in revenue, but they're like $870 million in the hole, or pretty much they're negative $870 million on the net income. So of course they're losing money, but this is a growth company. There's not too many growth companies that I see that doesn't have debt on the balance sheet or like negative cash flow. Even Netflix have negative cash flow and they're worth about $400 a share right now. But Tesla has a better business model than Netflix, but we're on Netflix, so let's keep going. So of course, Netflix doesn't have any free cash flow, but I should mention that they have $1.4 billion in capital expenditure. So that's pretty much what they're spending to expand their company. And that's not bad. So like this company is still scaling, they're still building factories, they're still taking orders. And I would definitely say that betting against Tesla is a bad bet, but because people have lost billions of dollars trying to short Tesla stock. And I mean like billions of dollars. Sometimes in like a weekend or something like that, they'll bet that the stock will take a huge dive and then it usually goes the opposite direction, and then people have to pay the difference of what the stock was from where it was and where it went up to. So I would definitely say I wouldn't bet against Tesla right now. This is pretty much the biggest stock, growth stock, that a lot of people are trying to get in on. Even at $800 a share, you still have a lot of people buying Tesla stock just because of the technology side of things. And if they do develop the autonomous driving part, I will say this, it doesn't just benefit Tesla, it benefits everyone. Because even you have a lot of other companies that are trying to do the same thing. So if they're the first to it and then they pretty much license out that technology, they can make money from that, and it pretty much benefits everyone. Like I have Uber stock and I'm rooting for Tesla just because if Tesla does come up with the autonomous driving, then Uber can save money just by just going and purchasing a Tesla vehicle and then using that to pretty much Uber and grow their business and become more profitable. I'm definitely rooting for Tesla in the long run. I hope they do get to the autonomous driving. They are on path to accomplishing it, and we'll just have to wait and see for this one, but I definitely say that this stock is definitely going to be going up in the future. If you do have enough money to buy some Tesla stocks, and I'm saying some Tesla stocks, not just one or two, because if you're trying to get wealthy or rich off of Tesla stock, you're going to need more than just one or two shares. I'm just being honest. That's just my opinion. Like, you're going to need a couple shares, 30 or 40 to say the least, just in case it does go to 5,000, 7,000, like a lot of people do estimate. That's pretty much my advice for this video. We'll see in a couple days who I will compare Tesla to, but I'm just gonna say right now that comparing Tesla to another like vehicle company would be kind of like comparing apples and oranges, but who knows, we'll wait and see. We just gotta wait to see on that one. So yeah. So if you like this video, hit the like button, hit the subscribe button if you haven't already subscribed to my channel. More content like this will come where I do stock analysis. And if you do decide to invest in Tesla, like I said, you're not gonna get wealthy off one or two shares. You're gonna have to buy multiple shares, get as many as you can, and good luck, you know. Let's get it, let's do it.